Welcome to the latest Motley Fool scoreboard. I'm on Intractable, and we've got longtime fools Dan Caplinger and Jason Hall giving a 1 to 10 rating to a cloud company that's a top 30 stock in the Moneyball database. It's NICE, ticker symbol NICE. First, we'll rate the strength of NICE's business, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Dan's at a 6. Jason, you're at an 8.
Yeah, you don't make it 40 years as a software company that's been public since the 90s without figuring out how to evolve. Disruption is a reality there, and this company has a long history of innovation and growing earnings. It's also embedded in 3 growing niches where its target customers want to work with trusted experts. You look at its results in its criminal justice segment, that's proof that even in areas where we think there might be a dominator like Axon Enterprise, which has been so dominant there, there's opportunity for multiple winners. Its customer experience business is a huge growth opportunity. AI is a tailwind for all 3 segments of its business, both as a tool to deliver more powerful offerings to its customers, but also as a source of risk that's pushing customers to it. So I think there's a lot more here to like than maybe most people realize. It's a nice business.
Oh, that's nice. Nice job, Jason. Yeah, I gave it a 6. I'm just a little bit more concerned these days. You know, no matter how well established you are in software, it just seems like artificial intelligence is a potential disruptor. And my concern here is just no matter how strong the business has been in the past, I just worry about competitive advantage as new technology advances, as you get new innovations. You know, everybody has to keep up. And so if NICE can get that job done, then it should work out. But I'm just a little bit uncomfortable that disruption could play a bigger role in hurting this business than Jason is.
Jason, real quickly, we've talked about a cloud company. What exactly does it do?
So it's a software company. And before the cloud, it was software that companies ran on-premise, and it evolved, right, to a software as a services business. And it has 3 different focuses: customer experience, CX. So one of the services that is starting to roll out, actually using AI, is customer agents as a service. So helping to provide the tools for businesses mostly that want to outsource that. And AI, I think, is a driver there. Financial fraud and risk, companies need a lot of help with that. And then criminal justice, it provides a lot of software tools that are used by the criminal justice, I guess you could say, industry. So whether it's thinking about courts that might be using it, that might be used within agencies, that prosecution, DA, that sort of thing. They provide a lot of the software that's used in those industries, and they've been doing it for a long time. Whereas Axon is really more of a new entrant into that.
Right on. Let's move on to management. A 10 is Warren Buffett. A 1 is Homer Simpson. Both of you have 7s, Jason.
Yeah, I was tempted to go higher. The CEO, Scott Russell, has been there less than a year. Dan will talk a little bit about him. Here's the thing. He replaced Barack Elam, who really built NICE into what it is today. He was the CEO for about a decade, and he had been with the company, I think, 15 years before he was CEO. Now I could also go lower than 7 because the stock has underperformed the market over the long term. A lot of that's tied to valuation now, though, is the interesting thing there. And really, since the kind of the bubbly peak days of the pandemic, investors have lost money since those peaks. But if you look at the business has continued to do really great, despite those legitimate concerns that Dan brings up. One of the things when you think about leadership for a business like this is you look at the board. It is deeply tenured. David Kostman has been the CEO since 2013. He's been on the board since 2001. The board is loaded with people that have been there a decade or more. And a lot are still current software industry executives and even CEOs. So I love the culture and that deep just group of people that are leading the business that are real experts in software, in the software industry.
Everything Jason just said, plus Scott Russell brings a lot of valuable experience into the CEO role currently. Past experience at SAP, at IBM, as well as PricewaterhouseCoopers, kind of gives him multiple angles into the business and how to run it.
For financials, a 10 is a fortress, a 1 is yikes. Both of you have 8s, Jason.
Yeah, I mean, this is what a grown-up software company's financial profile is supposed to look like. has high margin businesses. All software companies have high margin businesses, but they actually turn that high margin into wonderful free cash flow. And they're still growing. We talked about the markets that they're in, and they continue to focus on what matters, is continuing to look ahead. The business, since pretty soon after it went public, has consistently spent more than 12% of revenue on research and development. So they are continuing to focus on the future.
I like that expanding margin that the company's producing, and a lot of that free cash flow is going back towards share repurchases, which I like to see as a shareholder as well.
Dan, let's move on to valuation. How well will NICE's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
I give it my typical market projection, 5 to 10%. That's what I'm calling for the broader market right now. Safety of about 7. And I like the fact we've already seen a big drop in NICE stock, down more than 50% actually in the past 4 years. And so I see that as limiting downside. That's a big part of the safety score at this point. About 4 times sales, about 25 times earnings, quite reasonable in this environment. Again, why it's not a higher expectation, again, just concerned about those competitive threats, about how AI disruption could just throw a wrench into what's been a really successful business long term.
Yeah, directionally, Dan and I agree, but we are going to disagree a little bit here in our projections for returns. I think this is a business that's built to do extraordinarily well. The tailwinds, I think, support it continuing to grow, despite that real threat of disruption. Software companies don't have true moats. They have things that they're good at that give them competitive advantages, but they're only advantages so long as the company keeps them that way. They're starting to show they can integrate AI. And where Dan and I disagree is that I think that the specialists like NICE are going to beat the AI generalists. Trust and expertise matters if you're the decision maker on the other end of making a long-term agreement on an important software that's really critical to the operation of your business. And you combine those things with the valuation, 13 times free cash flow. This is an extremely, extremely cheap stock. Sure, there's always going to be competitive threats and disruption, but I think that the valuation, the quality of the business make it pretty safe. But I think they also set it up with those tailwinds to be an outperformer.
Thank you to both Jason and to Dan. They've given NICE an overall score of 7.1 out of 10. That's strong enough that Jason has no toppers, but Dan would go with Axon in that criminal justice space. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something different. It's Bitcoin. We're finally tackling it. Till then, Fool on.
This was a nice time.